Good afternoon, traders. This is Christian Farmer, Sharp Trade Group, and this is your end of day market recap for Monday, March 24th. Gap up day, big gap up day, and follow through from the gap up day. So, very nice price action. What I'm going to do in this video is go over, as usual, the technicals and the indices. And we will talk about some of the areas that outperformed the largest for the day. And then I'll also take you through what sectors are actually looking the healthiest at this point, or showing the biggest, or trying to retake some of those levels that price action went below. So when we start where we have, for where we've been in the last couple weeks, where most groups are down, it's very easy to kind of, I should say this differently. It's a bit easier to see what groups are going to start to come up first now that everything is kind of cycled down a little bit. So, risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving anybody's recommendations. Everything that we're going through is for information purposes only. Please read the full risk disclaimer there. And then as well, I will go through some single stocks where I see some particular strength that I like as well. So let's get to the charts first, and I'm going to review the indices, and just to kind of rewind a little bit and mention where we were basically, looking at the 1 hour chart, which I spent a lot of attention on last week. We were last week was basically a nothing week. It was a range bound week, up, down, up, down, down again, and then we finished higher, basically in the middle of the range from last week. We tested the highs. We could not break higher last week. We tested that Monday high several times, couldn't do it. We also tested the low on Friday and did not break down either. And things started to kind of really move after that, as we got into the end of the day and quadruple witching. Today, you had the gap up on Trump announcing that his tariffs will be he used the two T words. Tariffs was one, and the second one was targeted. So more of a target approach to tariffs, and that provided a pretty nice relief move in the indices today. So that's where we finished. We had some levels that we got up to, which was, there's a VPOC from last week. Sorry, this is a VPOC from 2 weeks ago that we did take out, and the market handled it pretty good. We digested a little bit of that, and then we continue to go higher. So what I would be watching, and let's go back to the daily chart for a second. I find this very interesting, is that the 200-day moving average really acted as a barrier last week. That's this thick black line that you've got. So, notable resistance. And we basically just price hopped over that today and also got above the 20-day moving average. So how would I tackle this going forward? Well, I would keep it simple. The more that you can make a very complicated, I was talking about this a little bit in the trading room today. It is tough with all the headlines that are going back and forth. So what we try to do when we've got a very complicated, like knee-jerk type moves on the tape, is to watch some levels and say, hey, I'm going to go long versus this level, and this is where I know it's not going to work. And by the way, I don't think that, like, even if you miss today's move, I don't think that you really missed that much. Today was a very nice rally day, and it was a huge move from where we were on Friday. But even if you missed the last couple weeks, because I know people are going to say, "Oh, you missed the move, you missed the rally." I mean, it's one day, guys, because we didn't really do much. We didn't do much of anything last week. In fact, we really didn't do much of anything the last 2 weeks. So take a deep breath. If you feel like you missed stuff, we all miss trades and we all miss some moves. Listen, I even took off a couple trades Friday morning because I wasn't comfortable with that price action that we saw in the beginning of the day. But that's fine. It happens. And one of those trades I put right back on today. Right around the same price, maybe a little bit higher, but in the grand scheme of things, it's not that big of a deal. Try not to focus on some of these small things. You're not going to trade this tape. You're not going to trade this tape or any tape perfectly. It just doesn't happen. You're dealing with a lot of moving parts and you've got to make some decisions on the fly, right? And it does help to have a trading plan ahead of time, but you're not going to make all the right moves. And even if you were wrong about, if you thought that this was a bear flag that was developing, as I thought this could be, you don't know until price resolves out of it. But if you thought things were like that, you saw bear flags all around or bear pennants, I don't blame you. Um, but the whole thing is once the pattern is not that anymore, then you have to adjust, right? And it's the old saying in trading, it's okay to be wrong. Just don't stay wrong. And that is the main point. Don't stay stubborn, right? Just because you thought something was going to happen. If it doesn't happen and there's new information on the tape, you've got to run with that. So that's my little talk there on that. Let's look at the Qs. Not as clean as SPY. Number one, this is good. So I would say plus because you're back above the 2025 value area. Now, again, we need to see more information. We need to. This value area comes into play on the weekly chart. So this is just the first day of the week. So far it's Monday. Long way to go to the end of the week, but that looks good, right? And we know that we're also in a stronger seasonal very strong seasonal time of the year. That's something that I spent some time in the weekend video with members talking about stronger seasonality. We also talked about how the VIX has taken a leg lower. VVIX has also taken the volatility. All of these volatility screens had really been moving lower. Another one that I spent some time in the weekend video was talking about skew. And look at what happened with skew. If you're not familiar with what skew is, it's instead of let's just back up one step. The VIX measures at the money, the implied volatility of at the money 30-day options. Remember, that's the only thing that the VIX measures, right? Some people try to overcomplicate it and think that the VIX tells them other things. Oh my God, it's fear. Da, 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 da. It just measures 30-day implied volatility of at the money options. Well, what does and that's just in the S&P, by the way, just in the S&P 500. Skew does the same thing, but it looks at the pricing of out of the money options. So going back to mid-February, this actually gave a really good signal. It told you that out of the money options were getting very expensive. And what happened? We had a sharp move lower. Now that all of that has come undone. So the price of out of the money options, 30 days out, has gotten cheaper. So it tells you that the market is no longer implying a big volatility event at the current, from what this is currently telling. So again, I went through all of this in the weekend video, but I know that this is a public video, so I'm going to go through a couple of these concepts that we went over. So Qs, yes, it's poked its head above the value area for the year. Let's see if it can maintain that for the rest of the week and maybe build off of this. So that's the first step to me, to get out of this range that we've been in for almost 2 weeks and get back at now we've turned the corner. So again, please don't go with these folks on Twitter that will try to tell you that you missed something. It's okay. It's just the first candle out of a downward range. That's 486.56. And the 200-day moving average is here. So this still has to get over the hurdle of the 200-day moving average. Who knows? Maybe we get some type of test or, like we did in SPY where we tried to go through it a couple days and couldn't do it. So that's what we've got for the Qs. IWM, I'll just cover two because IWM is kind of the wild card. And again, this is tough. Right. This is sometimes tough because price went back below the 5-period moving average on Friday. And then it just jumped back above these two moving averages on the gap up with, again, a very, headline driven market and gap up markets are not easy, but remember that gap ups or not gap ups, but the overnight trade is where the majority of the money is made over time. You could go back 30 years and it's a stark difference between buying the close and selling the open. Huge performance versus doing the opposite. It's something like I'm butchering, and let me see if I can find it really quick for you so you could see the exact data. Okay, so here it is. And again, like this is just something it's good to have in the back of your mind about where the overall gains are made in the market. This is the blue is intraday. This goes all the way back to 1993. And the blue is the intraday. The red is the overnight, which means buying the close and selling the open. Look at the difference in the gains. So, I mean, you could still maybe squeak out a gain if you do it like that, if you buy the open and sell the close. But more often than not, and it's very important. This is why I'm more of a swing trader, holding, because you have to hold overnight because that's where all the gains are. Now, it's not to say like every once in a while you're going to get unlucky, right? You're going to own a name and there's bad news on the stock, like a stock gets downgraded. But those are the outliers because over time, that's where the money is made. And the reason why I bring it up because we had another big gap up day, and it's easier for me to illustrate these points when we've just had that. But like you could see, for example, Qs were up 2% today. Change from the open was about a 0.5%. So the majority of that move was made in the after hours market. But I do like to see what areas were bought versus what areas saw profit taking once the open does happen. And you could see, this was a pretty good day because we did continue to rally and build on gains from today. Small caps actually outperformed for the day. They were up 2.5%. And cryptos had a huge day with Bitcoin. So let's go through a few more charts. We'll do Bitcoin futures here. Bitcoin futures, so making some nice progress. Again, like this could have been something that you may have interpreted as, going a little bit sideways, and sometimes you get a break lower here. We didn't get that, right? And price broke out of it to the upside. So now above the 20-day moving average, this had a lot of implications. I have to say that MSTR looks pretty good here. We've got the bullish 80% rule in place now for the month. I'm looking for a move which is about 5% higher, which gets you to the top of the value area. Now we only have a couple more days. Now we've got 5 more days of March, so this thing will have to get going here, and that's 352.60 where there's resistance. But even if it doesn't get there in 5 days, also notice that for now, and again, I'm going to say this again, disclaimer, it's just the beginning of the week, but notice that MSTR got back above its value area for the year, right? And that level to trade against, so you get 6% bumper room of 315.56. All right, I could go through a number of other trades in crypto. Robinhood had a great day too. Well, I'll bring up that chart as well. Robinhood made a real nice move today too. That was up 9% today, back inside the value area for the month. We'll have to contest with that 50-day moving average next. All right, a few other areas that I just wanted. This was also like, if you look at some of the areas that outperformed the most, it was some of the beaten up areas. And sometimes that happens when groups are really depressed. For example, outside of the crypto group, consumer discretionary, which has been one of your worst groups, up 3.5%. Tesla, a big driver of that. Of course, Amazon too. I'll look at both of those charts, but also retail, which has been pretty beaten up too, is up 3.1%. Leisure, like all the travel names have been really beaten up. That was up 3.2%. Software made a nice move. The semis has been another beaten up area, was up 2.6%. So I'm not sure that I would say that I'm going to follow some of these, again, sometimes they'll bounce, these things will bounce the most because they've been so beaten up. But that's just a 1-day move. It doesn't mean that there's a change in trend. It just means that these things were pretty oversold and pretty beaten up. But I will look at a chart of Tesla because I think everybody's talking about Tesla these days. But this is nice. I mean, we talked about this, I think, at Friday's video. Certainly, I tweeted it out after the close on Friday. Double hammer bars, and it did get above the level that I was looking for, which was 257.71. So this could be the start of a move back here in Tesla. And again, nice. Now you have a level to trade against. Also, when we look at this in the daily chart, I would also pay attention to that 200-day moving average, but really, really nice and impressive move by Tesla. And then the other big name in the consumer discretionary ETF XLY is Amazon. Amazon, I did not have enough. I owned Amazon about a week ago. I did not have patience for it. It didn't look all that healthy to me, but congrats if you held it. It was up 3 points. Now I do have it in the TTG trend portfolio, and sometimes it helps to not be looking at some of these names every day because I decided to hold it there. Sometimes I hold positions in two different accounts. Sometimes when I don't like what's going on in the short term, I take it off of my trading account, but I often leave it on in another account. There's another name I did that with too, but this did get back above the 200-day moving average. So where would you set your stop, right? If you think that this is the beginning of a move, Sim keep it simple. 200-day moving average for Amazon. I mentioned I'll get into a few different names. What's the name? The name that I'm thinking of here. Root. Root is a name that I owned in two accounts. I unwound it in my one account, I think back on Thursday, still holding in the TTG trend portfolio. But this was nice. This is a name that acted well, like, basically all last week was showing relative strength. So it took out a big VPOC up here. Sometimes, this is overhead supply. So whenever price gets to one of these blue, version point of controls, it's a battle between new buyers and existing sellers. Take note the last time we hit one of these VPOCs in this, right? The overhead supply won out and won out in a big way. So this is where you want to really be paying attention to it. If it can maintain above 173, then maybe it can move on to this next VPOC up here at 193. Again, they represent overhead supply where price has not revisited, where there's a lot of volume previously, right? And that would be up here. All right, so that's what I would be watching in this name. A couple other names from last week, Okta, right? And this same thing, was holding this name in two different accounts. Well, unfortunately, I unwound it on Friday. I saw it drop below the 5-period moving average, decided to unwind it. Still own it in the TTG trend portfolio. Didn't close on not the best looking close for the name, but I do think that this is a strong name. It had good earnings, and that's usually where I go to, especially when we've had the situation that we've had where we've had a dip or market sell-off. I usually stick to the names that are dipping in uptrends that have had very strong earnings. Speaking of which, another name in the space, really nice move here today. I almost got stopped out of this name on Friday, and I was like almost disappointed in myself for not selling it because of the break outside of the value area. But again, there was a lot of these little traps, false breaks to the downside. And look at the move today, up 7.7% today. Very nice. Another name too, HWM, had a nice move. I think aerospace looks pretty good. If you go through this aerospace group, you're going to find some nice action. Look at GE, right? GE is almost right back out to new highs. So, you know, amazing how quickly some of these names have recovered. Here's what our watch list. I'm not going to go through all these names, but this is how I set up the watch list. Now, again, it's not easy when you have a gap up like this, but what's Boeing seeks to withdraw guilty plea in 737 MAX case. Looks to withdraw a guilty plea. Interesting. But yeah, I mean, a lot of big moves today. I was going to mention sectors with you guys. Just, because you could see the only one that was flashing strength, which is above the 520 and 50-day moving average, was XLE. Now, did XLE do it today? No, it didn't. It did not, but it has to the whole week to close. Excuse me, it has to the whole month. So this week and the last trading day of the month will be on Monday, a week from today. But it could still break above here. And I did take a target in LNG today. That was also a swing trade. Nice move in LNG. This was a trade idea that I sent out last week in the Substack, as well as Root was sent out in a Substack on 314 as a trade idea. But nice move there out of this little consolidation here. So energy did not get outside of the value area, but still can possibly do it. But like I said, you kind of have a clean slate here. You don't have that many names that were showing strength. The only other one right now is aerospace and defense, which is above the 520 and the 50-day moving average. Again, why am I associating that? It just gives me a sense of shorter term momentum as it's labeled up here, right? But then you have to check out the chart to make sure that you've got a clean move here. But that's a really nice looking candle, and that gets you back above the 50-day moving average. Also gets you into the value area for the month as well. So those are some things. There's plenty of other names to go through, but I'm going to keep it short here for Monday and try to keep it a little bit simple too with some of the trade setups that I mentioned. Have a great night, guys. See you tomorrow.